Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief financial investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, it's Friday in the markets.
Bob, we have some listener questions and some interesting headlines. First of all, we'll get to our listener questions. The first one, my question for Bob, involves financial gravity. Many technical analysts maintain that the stock market recovery out of the March 23rd low is just like the rally out of the 2009 low and fueled by Fed liquidity. But as I recall, the 2009 bottom was the ending of an 18-month bear market that had undergone a lot of technical damage along the way. It's been less than 4 months from the February highs, and yet the bulls say that the bear market is over and another bull market has commenced. Bob, how can this be possible given the record amount of corporate debt, an overextended consumer, and out-of-sight PE expansion?
Oh, good question, Jim, and what a fabulous delivery you've given us. Yeah, gosh, I like the term financial gravity. Wasn't there one that went around about 20 years ago that gravity and bear markets suck? But at any rate, yeah, to answer that, I think we've got to look at the natural side of the stock market. Forget the news about the coronavirus. So here we were in December, January, upside exhaustions, technical excesses, at about a time when the rally could peak, which was our case, and it would have sold off anyways, and quite likely a cyclical decline. And whereas if you're looking at the big, on the surface, the crash was due to the coronavirus, and now it's recovering, and that's it. You know, it was just sort of a dreadful accident, and the rightful nature, of course, is the bull market, and it will continue. But no, we're going to stay and looking at the natural events underlying it, and we're in bubble territory, and each of the previous bubbles, because the financial side is so big relative to the economy. So when the stock market turns down and the bubble collapses, it takes the economy with it. So the other one that suggests that this is a cyclical decline is that in last summer, the yield curve, which is the difference between short-term rates and long-term rates, the yield curve inverted, whereby short rates went higher than long rates. And on our chart back to 1860, each time the curve is inverted, a recession has followed. It is like a mechanical thing. And then also, more recently, the curve inverted again, and so we had the double inversion. And the last time that happened was in 2007. And before that, it occurred with the conclusion of the Great Bubble in 1929, and also the Great Bubble in 1873. So the way to look at it is the natural side of the market and also the yield curve, and it suggests that this is quite likely a cyclical bear market with a cyclical economic recession. There.
Financial gravity. Does it suck?
But I like it, the financial gravity, yeah.
Yeah, does it suck?
Yep.
Yep. We'll have more with Bob Hoye right after this.
Aben Resources Limited is a gold exploration company. with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Bob Hoye. Bob, we have a question from Justin Lee in Berkeley. Hi, Bob. The Federal Reserve recently announced that they will be officially getting into the corporate bond market. What does Bob think this will accomplish, or does he think the Fed thinks it's accomplishing?
Yeah, this is the key question in the intervention by central banks is all this stuff. But what we have here is that the big story is that the rescue is the U.S. Federal Reserve is going to buy corporate bonds. Now, let me tell you about an editorial in Barron's, which is a very high-quality newspaper published weekly. In July 1932, they editorialized that every anti-deflationary measure taken by the Fed is seen not to be working. And they were buying bonds out of the market, corporate bonds, because at that time the U.S. Treasury market was quite small compared to the corporate market. So the other thing is that a little more academic. As the crash was underway, the New York Fed stepped into the market and bought bonds and exceeded its lending authority by a factor of 6 times. So the Fed has tried this before, and it did not work. And that little piece from the editorial at Barron's really is an important bit of information, because it just says every anti-deflationary measure taken by the Fed wasn't working. So, good question. Thanks.
Justin Lee also asks, if the Fed needs to do highly suspect manipulations of the markets by buying treasuries, corporate bonds, junk bonds, ETFs, equities through shell operations, what's next? Saving the muni bond market? And if so, don't the central banks end up owning nearly everything not bolted to the floor? Thanks, Justin.
Another good phrase.
Yeah.
I think the history, it's the same old struggle. You even go back to the crash of 1618, nasty in England, and an intellectual by the name of Edward Misselden looked at the hardship, unemployment, and as part of a paper published in 1622, his dreaming was that in a credit contraction, somewhere there is an agency that will provide credit and end the credit contraction. And then Keynes discovered that on his own in the 1930s. And no, it's all old knee-jerk ideas, and again, I don't think it'll work. So what we want to do is watch for the trading excesses. And we are, on some stocks, we're now getting excesses that people should know about. And also, by the way, at about the right time, in the middle of March, we wrote that it appeared to be close to bottoming, and the panic, and that it would likely rally out to mid-year. So here we are, and we're now getting some excesses on some stocks. So people should know about this.
We'll have more with Bob Hoye right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, apocalypse now. U.S. currency collapses. A dollar crash is inevitable. A couple of headlines that you just noticed. Is the U.S. dollar about to plummet into the abyss?
That's what they're saying. And again, history will be a guide. There's no question that the Fed has been reckless in buying bonds and expanding, injecting credit into the market. And then, of course, the next step is too many dollars, and then they'll be marked down. But this type of research doesn't include that. What do you think the Bank of England has been doing? What do you think the French bank has been doing? And any other central bank out there, they're all trying to depreciate their currencies as best they can, or as worst they can, is a better phrase. So then we just look again back at history, and in every previous post-bubble contraction, the senior currency, its purchasing power goes up because everything else is going down. So our line has been that in a post-bubble contraction, the U.S. dollar will become chronically firm against most other currencies and most commodities for most of the time. So then there's one other detail in here that's worth bringing forward, Jim, and that is that during the financial mania, which includes credit markets, it's not just the stock market, although the stock market always gets all the ink. But in the financial side, most of the debt is underwritten in the financial center, which is New York. So then, after the mania, you have all that debt out there, and most of it is due and payable in U.S. dollars into New York. So what is that? That's a huge short position of dollars. So this is one of the explanations of why the senior currency goes up in a post-bubble contraction. So I like those headlines because they were so sensational, and the researcher is so convinced. But then one of them was by a prominent guy, Stephen Roach, who back in 2007 was the senior economist with Morgan Stanley, the big firm. And he essentially said the same thing then. I haven't got my note right in front of me here, but I did have it yesterday. Anyways, he got the mortgage crisis right, but he said that would trash the dollar. But what happened is that once you got into 2008, when the liquidation problem became so severe, the U.S. dollar rallied quite strongly. And so this is what we think will happen. Maybe oftentimes financial difficulties can be discovered in the fall. So our view is that after August, we can start looking for seasonal problems. And I think that we'll see that that with a crisis, another one, here's another reason why the senior currency goes up in a storm, is because careful money goes to the most liquid items, and one of the most liquid items are treasury bills, short-dated notes, shorter than 1 year stuff, and that's where you got the liquidity. So then there's another reason to bid up the dollar. Now, the other thing that happens, which we like because it's kind of like gold, is that in a storm, the other focal point of liquidity can be gold. So I think in a storm you're going to find people buying U.S. Treasuries and buying gold. So there we are. But so I love the sensational headlines, but I think the surprise will be not that the dollar crashes, but that the dollar is steady to firm, and technically we're watching it here, and I'm sure we'll catch the breakout when it happens.
Bob, thank you so much for chatting with us.
Well, here we are. We've had our Friday morning together, Jim, and we'll look forward to next week.
My guest has been market historian Bob Hoye, the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, you can send them to info@howestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.